Good afternoon, everybody. Welcome to the Renaissance SOAG investor briefing for the Q1 results for fiscal 2026. Thank you for your time. It's great to have you here. As way of introduction, my name is Andrew Dawson, I'm the CEO of Renaissance Services, and with me is Juma Al-Khamisi, our CFO, who many of you will know from previous calls. So welcome to you all. I'll just make a short introduction. I think since you've all seen the company results and our chairman, Samir Fancy, I think has provided a very detailed chairman's statement that well summarises what was, as you read, a challenging first quarter for us. And I'll just add a few remarks before we throw it open for questions. I think just to reinforce a few things. Firstly, the fundamentals of the Renaissance business remain very strong and unchanged. Q1, as you're reading that statement, reflects the continued themes that we were really talking about in each quarter across 2025 and the mix of business between the accommodation services and the contract services business. A few of the points in Q1, we saw quite stable occupancy at Renaissance Services Village in Dukkon, and then we faced the challenge in March where we had some business disruption linked to the regional crisis, and that's taken us the rest of the quarter and indeed early in Q2, early in April, for us to recover to return to the full occupancy. But numbers are back to where they were there now, and as you can see, I think there's been many announcements recently through the government in terms of the potential, and I think for the mid to long term, we're very confident on the potential of RSVD and the upcoming projects and development there. PDO, the other side, our permanent accommodation villages with PDO. Again, as we were talking about in the last couple of quarters of last year, we're seeing a kind of a two-speed economy in the oil fields at the moment, with different demand between the southern and the northern fields, and a much kind of higher activity in the northern fields. But given the current circumstances, I think we've highlighted there continues to be a mismatch between some of the contractors' choice of accommodation outside of the PACs compared to the PDO worker welfare standards, which is why the villages were commissioned and built on behalf of PDO. So we're continuing to work very closely with PDO on specific areas where there are opportunities to increase the occupancy of PAC through improved compliance to PDO's worker welfare standards. And we're hopeful to see results flowing through to the business in the second half of the year. And we're working very closely with all levels of PDO leadership, including at the highest level. I think the chairman's statement also highlighted we faced some specific one-off challenges in Q1. We had some challenges at the Port of Salalah there with the fire. We had a very fast, significant mobilisation contract for a very large new contract. We mobilised that in about 24 days. That's had an impact on Q1 in terms of the size of that mobilisation. However, that contract, it's a long-term 5-year contract, is now operating in line with our projections and will provide solid underlying sustainable long-term profit for the business moving forward. I think that chairman's statement also highlighted the impact in our utilities division. We have some disruption there with the meter supply through NAMA as they change meter suppliers from what was imported meters into locally produced meters. We do have contractually committed volumes there with them, and so while we're working on actions to try and match our workforce with the current availability of meters, we do expect those full volumes to flow through again in the second half of the year. I think we also highlighted a strong pipeline and some good new business wins, and we're continuing. Particularly, we're happy with continuing to sign some new hard services, so maintenance and engineering contracts, which is a key part of our strategy in growing the capability of Renaissance in the hard services area. And at the same time, as we spoke last year, we've launched a new target operating model in January to be much closer to our clients, focused and client specific. And through that, we are working on optimising our overhead costs. We've made some good progress in Q1. We're continuing across Q2, and we're going to have some good benefits for the bottom line of the business across this year and indeed into 2027. I think we continue with strong cash conversion, and although we've faced some supply chain headwinds with the regional crisis, really very little impact in Q1, I've got to say. We are seeing obviously ongoing impact in Q2, but again, our teams are working with our clients, re-engineering our menus and various discussions with clients. And our supply chain has really got ahead of the curve in building our stock holdings, and we've got good resilience in that supply chain. So disappointing results for us in Q1, which really reflects this convergence of a number of short-term challenges, but just reiterate, it does not reflect any change to the strong, resilient underlying fundamentals of the business model of Renaissance. So I think hopefully that gives a little bit of summary, and there's much more detail in the chairman's statement, as I said, and we'll utilise the time for you to take your questions and do our best to answer them in as much detail as we can. So again, welcome, and we'll throw it open for the first question, please.
Thank you, guys. We will start taking the question and answer, and just to remind ourselves and reminding the audience on this, the reason for this seminar or forum is to highlight the Q1 results without forecasting numbers. So we request you to avoid on going other than the meant for seminar. But however, we'll try to address whatever we can address. And just to tell that we can take the question in Arabic and English, so don't hesitate to ask us also in Arabic if required. We will be addressing them in Arabic as well. So please, we will start from the first question. So I could see in the list Joyce Matthew. Please go ahead.
Hello, good afternoon, gentlemen. Thank you for the opportunity. First question is on whether you will be able to quantify the amount of lost business on the PDO packs as a result of the private accommodation facilities being set up in different fields.
Yeah, so Matthew, again, and we are treating this business as one segment. So we have accommodation solutions, which is, as you said, in the oil field, as in Duqm as well. And we have the contracting businesses. Yes, the disturbances have been happening in the accommodation solution in both the oil field and in Duqm. So unfortunately, we will not be able to quantify the numbers between the two solutions because all of them are integrated. So we do also contracting businesses in our own facilities, and similarly to the BDO and other oil field clients. So we prefer to stay with this as for the competitive advantage.
Okay. And you mentioned about a very large new contract that is being mobilized in the first quarter of the year. Could you please throw some color on the nature of this contract and what is it relating to? And also on what was the additional impacts that we have seen during the first quarter of the year, especially for the mobilization?
Sure. So that contract we have already announced it last year. We have won a contract of SQU catering services, and that contract require us to do mobilization of large number of people And also there's a disturbance in the business compared to the number of days and Ramadan for catering the students. So that's the contract we are talking to. But however, that has been sorted out, and going forward, that we will be yielding very good business for us. You want to elaborate on this, Andrew?
No, I think that was it. And obviously, starting a large contract like that, I think there's 17 operational locations on the campus, taking over a large and mobilising a large workforce, and obviously in January with having to mobilise, and then in very short time there's holidays and other complexities. So that was the impact in bringing that to life. But we were, I guess, aware of that as we signed the contract. We've got a long-term contract, and it's now settling into its good operational pace. Joyce, just on the packs, because I think we've shared in the past, I can just share a little bit more colour for you in the PDO packs. In terms of the occupancy, I think in Q1 our occupancy was around the 66-67% mark. Actually, and I think we've shared this before, really since Q4 of 2024, there's been a slow decline in the occupancy in the packs when you look across them holistically. I think the first half of 2024 was very high because there was a changeover in contractors. I think there's been a lot of change within PDO as well, and within contractors. And look, this has been worked very closely with PDO, as I said, at all levels of management. And I think we're positive about the outcomes which are going to be achieved in addressing some of these challenges, and seeing some improvements in the utilisation and the occupancy of the packs flowing through later in the year.
All right. So what was...
Just to remind us of the fundamentals, all our accommodation solution has been built onto certain standard, whether it is in the oil field service or in a CSAT standard, to enable those businesses. And those standards are being set once we build this building. Of course, due to the market conditions, everyone is trying to have some saving here and there. And our role is to bring the fundamentals back to the standard which should be actually adopted, and the reason where we have invested in our accommodation solution. And we are engaged very closely with either with BDO in the oil field or in CSAT, and to enforce the standards. And we can see our clients' engagement on supporting the direction and bringing things to the fundamental of this accommodation solution. We are seeing progress, and we continue enforcing those standards for everyone who is actually around that area.
And I think, as we've spoken about in previous quarters, this comes then to, for Renaissance, this comes to the mix of the revenue and the percentage of our revenue flowing from the accommodation solutions we've spoken about before. High capex, high return kind of business model, and we've made those investments, over a long period of time, versus the contract services business, where we're seeing continued good growth, which is much more low capex, lower margin business. So it needs a lot of growth in the contract services business to offset any kind of declines in the accommodation solutions business. But the fundamentals are strong in both. We are working, as we've said, closely with CSAT and PDO on these underlying, their worker welfare standards and the compliance with various contractors, and we're confident on some good outcomes there to help with that occupancy on the accommodation solution side of our ledger.
Okay, all right. Thanks for that. And when you're saying your pack occupancy is 66% for the first quarter, and you're expecting it to improve in the second half of the year, where do you see that the average pack occupancy levels for the full year 2026?
I think, actually, I was looking back, Joyce, I think at the long-term average of the pack occupancy, I think if we look back over the last 11 years, is something like 83%. So this is, since 2024, this is quite a decline. I don't have the numbers in front of you actually to give you in front of me to give you the definitive forecast for this year, but we definitely see some strong potential for significant numbers improving. As I said, in the second half across Q3 and into Q4, and what I think we should expect, over the medium term, at least to be back at those numbers. I think if you remember, has been shared on previous calls, in 2023 there was an expansion of the packs for in collaboration with PDO, with the support of PDO, to prepare for some increases in activity in the oil fields. And working with them and all the discussions with them, we should still anticipate that to eventuate. So.
All right. Yeah. So if you're unable to give me any proper guidance on that, what are the drivers that you are seeing that will drive the occupancy level higher?
I think the driver is the whole reason, and it's, if you look at the underlying kind of business case and the rationale for both Renaissance Services Village in Dukum and the PACs, the permanent accommodation for contractors with PDO, both of them are built on the worker welfare standards. So PDO has specific welfare standards to ensure the safety of the contractor workforce, that they're well rested, they're well fed, they have access to clinics and specific facilities to ensure their safety, their productivity and their well-being. It's very, very similar, slightly different standards, we'll say, but very, very similar reason for RSVD, in line with the CSAD standards, which are linked to the International Labour Organization standards. So those fundamentals have not changed, and the commitment of those organisations to those standards have not changed. It's somewhat down to the enforcement of those standards and some of maybe the changes in management, some of the short-term economic drivers, which maybe have caused some of this leakage, I'll call it. But I think we're confident in all the discussions we're having. There's no change to those commitments, those underlying fundamentals, and hence, confidence in the occupancy improving as we move forward.
But is there any concrete steps that you're taking with the PDO for moving these contractor employees from the village accommodations to PACs? And how soon do you see that this is getting fructified?
Indeed. So there's many concrete steps that are being taken in partnership with PDO and indeed with various contractors. So in certain areas, we're already seeing improvements and the inflow of new contractors. In other areas, well, then we're anticipating that coming across the coming months. So look, it's not one, it's multiple locations, there's multiple contractors. So there's many discussions, many initiatives. Some are happening, some are coming sooner, some are a little bit later. We're in a lot of there's a lot of work being done in collaboration.
Yeah, so I'll link this to the questions asked by Sadullah Javed. So his first question around the Dukum occupancy. So Dukum occupancy goes low in Q1 to 22% level, and that's also factored by the disturbances which happens in the region. And the numbers are coming back to the earlier level, which is also not that big. We're talking about 27, 28 levels, and it is growing since the activities in the ponds, dry docks, and the ports are coming back. So it's coming back to the earlier level. However, the outlook of Duqm is very positive. We saw a lot of move on new contracts is coming up and signature. And this is a matter of timing. Is the things our assets is ready, already invested, all the facility are there. Every actually ingredients are there. Is just yet to the timing when this project's coming up. And in the second questions, lead times of between the project agreements and milestone of worker on site. What does the time typically look like, and when start seeing the revenue from it? It's a tough question. I can say it depends. Some projects can be mobilized easily, and you can see people actually, especially the management, the people who arrange the logistic, the people who are actually trying to do the mobilization is starting and the time between the agreement signed to the physical work start can vary between 3 months to 2 years. So it depends on whether there's any obstacles between the organizations in CZ. So I don't have the exact timing on that. The third question, I'll ask Andrew to address it regarding the utility disruptions as in smart meter readings and what we are doing about it to mitigate the downturn of that businesses. So that's basically the question. With the revenue is declining, so same talking about the same utility disruption.
Yes. And I can see the question there about the manual reading and physical bill becoming redundant. Absolutely. So in our utilities division, since we've been operating that with NAMA, absolutely, we've been installing the smart meters. That's been a big part of the scope of the work, and subsequently we've been retraining and redeploying the previous meter reading staff into various activities, both in the utilities and across the rest of our business. That was part of the proposition. However, there's ongoing work in the smart meter installation, and as part of that, there's still teams for fixes and disruptions and various things. So across the rest of this year, we're not just on the single phase smart meter installations. We also have 3-phase meters. There's larger, more complex meters around the distribution networks, the transformer meters, and we actually signed new scope just in 2025, which we are expecting this year, with the distribution transformer meters. There's actually 12,000 additional of those meters. And we are just working through, because it's a brand new activity, brand new scope. We've been working through with NAMA to certify and have signed off the safe work methods and actually the methodology to install and bring online those meters. That's going through the regulatory process with NAMA. We're working with them, and once that's been signed off, then that activity will be starting. So we do have substantial activity contracted and in scope through the rest of the year. So I think it's a short-term delay in the meter supply and then in standing up this new certification for these distribution meters. And then there's been a substantial number of new tenders which have been released around the utilities business over the last few months, which we have been responding to with significant volumes of potential new work. So hopefully that gives them some colour there. And as part of that, on the trying to match our workforce with short-term disruption, then we've been working on further fast-tracking some of the reskilling and movement of workforce where we can into other parts of the business.
I hope we have addressed the question. Joyce, please go ahead. Sorry to disturb you earlier, just to link things together. Joyce, go ahead, please.
Sure. Thank you. Could you please tell me what was the additional cost impact due to the SQU contract mobilization during this quarter?
Want to take that?
In terms of the one-off mobilization cost impact was,
Yep.
I think, in the region of about 150,000 in terms of our mobilization costs, which will be recovered over the, obviously over the term of the contract, but to stand up, the labour, the equipment, invested in various marketing initiatives and new areas to drive additional revenue over the contract term.
Yeah, so Joyce, also just to add to what Andrew mentions, normally these kind of contracts, we need to mobilize with a number of people. That's number of people in a certain timeline. And if the revenue due to the low business at that time, that will impact us will appear our cost is higher than the revenue. And there was a disruption due to Ramadan times and also due to the number of students on the campus. That's affecting it's one time, I can say it one off. Once the mobilizations happen, then all the contract will perform as usual. We are monitoring through efficiencies and through operation excellence. We are trying to optimize. We see the contract is very good and profitable, but mobilization of a big contract always come with actually a planned cost. So this kind of cost is not new to us. It's known when you mobilize such a large contract, not something we don't know about it. And it's expected in many kind of large scale contract.
And we already see the good operational performance flowing through that contract now. So.
Yeah, sure. My next one is on your Sodexo acquisition. So, you mentioned that you will be able to provide more color on the operational performance as well as the financial performance of the company once the acquisition is over. So, I would appreciate if you can give us some color on the financial aspects as well as the operational aspects of your acquisition and what are the synergy benefits that you are expecting from this during 2026 and probably for a medium-term outlook.
Sure. So we will share whatever we can share as in this forum. So CAD deal has been completed in March, and it will be integrated in our books starting from 1st of April. So the business is similar what we are doing in terms of the facility management, and specifically with catering. The company have different set of customers, different set of platform. So we believe on as we are growing in Oman, this is a very good platform to expand. Regarding the numbers, actually that business can contribute to us around 10% of our turnover, our revenue, and also in terms of earning per shares can increase our earning per shares from 4 to 5%. And this is the initial number. We are working on optimizing the cost and integrate that business and removing some of the cost layers which now being handled as the company run as standalone. So we are going to integrate it slowly without affecting the performance of the company. And we look at it as very positive move to the right direction. We need such kind of inorganic growth in our business, either in the local market or outside Oman. So we are also looking to different kind of opportunity, and we will announce once it is materialized. But we have very strong pipeline, and as you know, Joyce, M&A is normally take longer time than expected, and sometimes you feel it will be happening tomorrow, then it gets extended for another 3 or 6 months. So this is always the case, but we have built a strong pipeline. We have invested in bringing in investment teams under my umbrella, which specifically look to the growth area in the inorganic space. Want to add some more?
Just to add for you, Joyce, just back on SOCAT, the synergy. So we're already seeing, we've been together now, what, 6 weeks? We're already seeing some good synergies in the supply chain. So it's a quick win there in terms of combining some of our purchasing power and leveraging the volumes that we have. So we're actually already delivering some of those, which is great to see come through quickly. And there's numerous synergies the teams are working on, particularly in the back office. I think we've said, on the market, we really want to preserve. SOCAT's got a unique position and different market positioning and offering to what Renaissance has. That was strong rationale for why we've acquired. But in the back office, around our IT systems and in HR and finance, and as I said already, in supply chain and some other areas, we're seeing some where we've identified good opportunities for synergies, and indeed we're already seeing some of those benefits into the business.
And just to add, Joyce, we are looking to this integration as positive point of view because we are looking two sides of integrations. Yeah, and we are acquiring this business, a very good platform. It used to be owned by Sodisco, which is a global player, where there's good set of platform and practices and SOPs might be fit in our area to enhance our operation and operation excellence. So it's 2 ways of integration, and we see it very good and working fine as we go. We don't see any obstacles, and we are dealing with a very professional setup where the support is extended and where the relation is being very fantastic as we go. And that's basically what we are seeing. So thanks to God, we have started cracking that organic growth, and we have more to do in all the businesses which we are looking at, from waste management to hard FM, where we need more strength. And also we are looking to different geography in Oman and outside Oman.
All right. Yep. My final question is on your Ministry of Health contract renewal process. Are there any updates that is worth sharing? Also, could you please remind me now when is the current contract ending?
Certainly. So there's no real updates from last quarter. I think we shared that late in 2025, maybe the end of Q3 in 2025, had an extension for 2026, so a 1-year contract extension. So the current contract runs till the end of 2026, and that's where we're at. So at present. No further updates.
All right. Appreciate it. Thank you very much for all the answers. Highly appreciate it.
You enriched the discussion with your valid questions, and I hope we have addressed it all.
Thank you, Joy.
Any other questions? I couldn't see any raised hands.
Okay, so we're open to questions, and we'll let's wait a few minutes and see if anyone else joins or has questions for us. Okay, shall we wait 1 more minute?
Yeah.
Let's just be sure we don't want to miss anyone and any opportunities. Okay, I think we've not seen any other questions, so I think we'll bring it to an end. Again, we'd just like to thank each of you for joining the call today. Thank you very much for your ongoing interest in Renaissance. We really appreciate the questions and the opportunity, and hopefully we've been able to explain where we're at with the company. And we said we've really strong fundamentals of underlying the business, some short-term challenges, and we're seeing the light for those as we as we continue to progress now halfway through Q2 and into the second half of the year. So thank you very much, and we'll leave you with strong confidence for the future, and wish you well for the rest of the day. Thank you.
Thank you, everyone. Thank you.